Welcome back to Retirement Coffee Talk with Charisse Rivers at Zinnia Wealth. Online, zinniawealth.com, or to give us a call, 833-368-3680 to sit down and talk about your retirement, how it's all going to work. Baseball season is over. The LA Dodgers won the World Series. And of course, after they, say, where's the parade? The next question is, can you do it again? That's what, will you let me celebrate for just a minute before you ask me, can we do it again? The Dodgers actually have a unique situation. A number of their star players, like a half a dozen, have deferred millions of their contracts for years to come, even after they're done playing. So the Dodgers are on the hook for these contracts for years and years, probably 20, 30 years they're going to be playing. But in the meantime, it really does help them build the team. So with that word deferred, Charisse, you have talked about this in the past, that there are people that walk through your doors and they have a business. Right. And, they've been making, whatever they've been making all these years. It's been able to, power what they do in their life. But now they want to sell their business. And all of a sudden, Uncle Sam looks at them as a millionaire. You just sold your business for $5 million, and now you owe the taxes on that. They take a massive hit in 1 year. Is it possible, like these baseball players, to defer, not the salary, but defer the taxes for later in life and spread this out a little bit?
Oh, yes. And I'm going to tell you. So I just did one the other day and had to get the trust attorneys and the accountants, everybody involved. And they won a suit against a big retail firm.
So a big windfall. Okay.
A big windfall. They were expecting $12 million. I think they got just a little over $5 million.
Okay.
And we did the math on it. And sometimes when you win these lawsuits, depending on what it was about, if it's commission driven or whatnot, it's either taxed at capital gains or ordinary income rates. Okay. So most of the people we do this with, it's based on capital gains rates, which is typically lower than ordinary income rates. It always has been.
Right.
And so this person, it was one of my first, it's like, oh no, this is ordinary income rates. I'm like, oh shucks, this makes more sense than it ever did before.
Yeah, big tax bill. Yeah.
To be able to keep all of that money, we have to put it into a tax strategy. I don't want to give up what the tax strategy is, but it's beautiful. It's a wonderful option. I don't know any advisors that do it in the surrounding areas, but I just felt like it was something that was needed for clients and their friends and family that were selling big commercial buildings. If you're about to write a $400,000 to $500,000 check to the IRS, don't come see us. We'll talk to you about how that works, because you can still put these dollars into any kind of investment you want. You just don't have to pay Uncle Sam now. And, you keep it for, so many years. But you do have to take income from it eventually. Like they usually give you like a 3-year time period. And this is, okay, now you got to pull like 4 or 5 or 6% from it, and based on rate of return. And it's a great option. And after so many years, you can do it again. You can walk away from it. Of course, when you walk away from it, that's when you pay your taxes. And it's just a really great option out there. Doctors who are selling their businesses, any kind of non-injury lawsuit, this makes sense for, and so much more. So we have gotten a lot of calls, and people are happy to know that there's somebody locally that's doing this, because they can have the face-to-face. They can work with somebody instead of driving to Orlando or driving to Tampa, et cetera. So it's a nice option.
Thanks for listening to the Retirement Coffee Talk podcast. If you have questions or would like to begin the process of building a tailored retirement plan, call Zinnia Wealth at 833-368-3680 or find us online at zinniawealth.com.
Investment advisory services offered through Zinnia Wealth Advisory, LLC, a registered investment advisor. The firm only conducts business in states where it is properly registered or is excluded from registration requirements. Registration is not an endorsement of the firm by securities regulators and does not mean the advisor has achieved a specific level of skill or ability. Insurance products are offered through Zinnia Wealth Management, LLC, Florida license L078655, and Charisse Rivers, Florida license P037744. Zinnia Wealth Advisory, LLC, and Zinnia Wealth Management, LLC are affiliated entities. The information presented is believed to be current. It should not be viewed as personalized investment advice. All expressions of opinion reflect the judgment of the presenter on the date of the podcast and are subject to change. The information presented is not an offer to buy or sell or a solicitation of any offer to buy or sell any of the securities discussed. You should consult with a professional advisor before implementing any of the strategies discussed. Any legal or tax information provided in this podcast is general in nature. Always consult an attorney or tax professional regarding your specific legal or tax situation. Any client experience discussed on this show are unique to that client. Annuity and life insurance guarantees are subject to the claims paying ability of the issuing insurance company. If you withdraw money from or surrender your contract within a certain time after investing, the insurance company may assess a surrender charge. Withdrawals may be subject to tax penalties and income taxes. Persons selling annuities or other insurance products receive compensation for these transactions. These commissions are separate and distinct from fees charged for advisory services. Insurance products also contain additional fees and expenses. Social Security rules and regulations are subject to change at any time. Always consult with your local Social Security office before acting upon any information provided herein. References to specific investments should not be construed as being past specific recommendations. The returns for various indices discussed in this podcast do not represent the performance of the firm or any of its advisory clients. Returns do not reflect the impact that advisory fees will have on an investment. Past performance may not be indicative of future results. All investment strategies have potential for profit or loss. Different types of investments involve higher and lower levels of risk. There is no guarantee that a specific investment strategy will be suitable or profitable for an investor's portfolio. Historical performance returns for investment indexes and/or categories usually do not deduct transaction and/or custodial charges or advisory fees, which would decrease historical performance results. There are no guarantees that a portfolio will match or outperform a specific benchmark. Investments in fixed income products are subject to liquidity risk, market risk, index rate risk, credit risk, inflation risk, purchasing power risk, and taxation risk. Because bond prices fluctuate continually, their yields change constantly.